I spoke to 3 AIs about my pension, and only one of them gave me the right answer. I didn't like what the other two said. Now, I asked you guys the same question that I asked the AIs, a question about pensions, and you answered, well, 236 of you did anyway. I asked, if you could only invest your pension in one index fund, which would it be? And your answer was the All World Index. Now, should we listen to the power of the crowd? Well, a small crowd anyway. Now, it wasn't a resounding definite response. No, in fact, just over half of you said the World Index Fund. Now, when we ask an AI the same question, it answers based on what it has learned from reading millions of articles from real humans. It sweeps up the power of the crowd and it plays back to us all as if it was telling us something it made up itself. So I asked exactly the same question. Here's what ChatGPT said.
If I could only invest in one index fund for a pension, assuming a long time horizon, 20 plus years, moderate to high risk tolerance and global diversification as priorities, I'd go with Vanguard FTSE Global All Cap Index Fund, accumulation or equivalent from another provider. Chandler, why this fund? Global diversification covers both developed and emerging markets, includes large, mid, and small cap stocks, over 7,000 companies worldwide. Passive and low cost has a total expense ratio around 0.22 to 0.30%. Fully passive tracks the FTSE Global All Cap Index. Reinvests dividends accumulation. Good for a pension account. Dividends are automatically reinvested. One-stop shop simplicity. No need to rebalance multiple funds or tilt by region or size. Alternatives depending on your preferences. Vanguard Life Strategy 100% equity includes bonds if you want eventual glide path to de-risk. iShares MSCI ACWI, similar exposure ETF format. Fidelity Index World Fund, lower cost but lacks small caps emerging markets. Would you like a UK SIP friendly version specifically? Great for a UK SIP, self-invested personal pension. And assuming you want maximum global diversification, simplicity, and long-term growth, here's the top pick, Vanguard FTSE Global All Cap Index Fund, accumulation. Why it's ideal for a UK SIP. Available via most UK SIP providers, e.g. Vanguard, AJ Bell, Interactive Investor, etc. ISA and SIP compatible. Accumulation units, reinvests dividends automatically, perfect for pensions. Broad global exposure to 7,000 stocks in North America, Europe, Asia Pacific, emerging markets, includes large, mid, and small cap companies. Key details as of recent figures. Metric value. Value, ongoing charges, OCF 0.23%, fund type OEIC, not ETF, currency GBP, hedged version not needed. Platform availability, Vanguard, AJ Bell, etc. Who it's best for. Long-term investors, 20 plus years, want maximum diversification in a single fund. Prefer hands-off investing, no rebalancing or fund switching. Comfortable with equity market volatility in exchange for growth. If you're using Vanguard Investor UK as your SIP platform, it's especially convenient since this fund is native to their offering. Otherwise, you can still get it through platforms like AJ Bell Uinvest, Interactive Investor, Hargreaves Lansdowne.
Now, that was not the answer I wanted to hear from ChatGPT, really. So let's try Microsoft Copilot. So Copilot doesn't seem to want to talk to me today, so I'll have to read it out. Great question. If I had to choose just one index fund for long-term pension investment, I'd go with Vanguard Total World Stock Index Fund, VT, or similar, Global All Cap Equity Fund, and here's why. Why VT? It offers maximum diversification across geographies, US, Europe, Asia, emerging markets, etc., market caps, large, mid and small cap companies, sectors, tech, healthcare, finance, consumer goods, etc. Again, I don't like that answer. Let's give it one more go. Here's Google Gemini.
I cannot give you specific stock tips. Providing financial advice would be a violation of my safety policies. The stock market is highly complex and volatile, and what might be a good investment for one person could be a poor choice for another.
Now that's an answer I can get behind. The AI knows its place.
Any investment decision should be based on your own research, financial situation, and risk tolerance. Here's some general information about the current market and some tips for how you can approach investing. Current market overview. The stock market has recently experienced significant volatility. A recent weak jobs report and new tariffs have contributed to market uncertainty, leading to major indices like the S&P 500, Nasdaq, and Dow Jones to fall. Corporate earnings. While the market has been down, many companies are still reporting strong earnings for the second quarter. This is a positive sign for the underlying health of many businesses. Interest rates. Expectations for interest rate cuts from the Federal Reserve have been a major factor influencing the market. A cut could provide a boost to the economy, but there are also concerns about it fueling inflation. Top gainers and most active stocks. On any given day, there are stocks that see significant gains or high trading volume. However, these daily movements can be unpredictable and do not guarantee future performance. General tips for investing. Do your own research. Never invest in a company or asset that you don't understand.